Hi everyone, I'm Gloria. Welcome to my accounting practice assessment. This is an accounting cycle. It is a sequence of accounting procedures which are carried out repeatedly during each fiscal period. Fiscal period is a specific period of time which earnings are measured. The cycle starts off with source documents, which are invoices, receipts, etc., that serve as proof for a transaction. They are the first documents that assist relating to a transaction. The next step is journal, where transactions are recorded chronologically into. The third step is ledger, which is T accounts. It is a collective term for the accounts of the business. The accounts are in the shape of a T. In this step, we take all the debits and credits relating to one account that draw up an account for it, and all the transactions relating to it. The fourth step is trial balance. It is a sheet displaying all the accounts of a business, drawn up as a trial of whether the total of all debits balances the total of all credit balances. The trial balance is prepared as a final check just before the financial statements are drawn up. The next step of the cycle is adjustments, where things will be modified if needed. The sixth step is adjusted trial balance, making sure the debits still equal the credits after making the period-end adjustments. The second last step is closing entries, where it prepares and posts closing entries to transfer the balances from temporary accounts, such as the revenue and expenses from the income statement to owner's equity on the balance sheet. The final step is financial statement, which is the most crucial step in this cycle. It is an important report prepared from the information in the trial balance, showing the financial position, performance, and cash flows of a business. It is usually prepared once a year. This is a balance sheet. Basically, it is a snapshot of the financial position of a business at any given point. In the balance sheet, there should be a title consisting the name of the company, balance sheet, and the date. We always put the assets on the left and liabilities on the right. Assets are anything tangible or intangible that are capable of being owned or controlled or to produce value, which have a positive economic value. Liabilities are those amounts owed by a business at any one point. It is often expressed as payables. It includes loans, mortgages, accounts payable, etc. All the words in blue are the accounts of the business. This is the shareholders' equity, which is the amount of the funds contributed by the owners. To get the owner's equity, subtract the total liabilities by the total assets. We should always keep in mind that the total amount of each category should be underlined, and double underline the total assets and the total liabilities and stockholders' equity. Total assets has to balance with the total liabilities and the owner's equity. Revenue recognition convention is one of the GAAPs. GAAPs is known as Generally Accepted Accounting Principles. Revenue recognition convention provides that revenue be taken into the account at the time the transaction is completed. Usually, this means recording revenue when the bill for it is sent to the customer. For example, a large project, a construction for a building. It takes construction company number of years to complete this project. The company does not wait until the project is completed before it sends its bill. It bills for the amount of work completed and receives payment as the work progresses. Revenue is taken into the accounts on this periodic basis. The following table states the transactions are for Mr. Lee's accounting service. I used a journal entry to record the accounting entries for all transactions. The transactions are recorded in the order of the occurrence. First, I put the month, date, and year on the first column. For the first transaction, I debit tax expense 200 and credit accounts payable 200. The credit account and amount are recorded second and are indented. The third row states the description of the account, tax service on an account. Then skip one line between transactions. The second transaction, put down the date only on the first column. Debit electricity expense 100 and credit accounts payable Hong Kong Electric 100. Electric expense on account. The third transaction, January 8. Debit accounts payable 200 and credit fees earned 200. Service performed on account. For the last transaction, debit accounts payable electric and credit bank 100. Payback account payable. In this journal entry, the description for each transaction are missing, and the month shouldn't be repeated for each transaction. For March 4th, the description should be service performed for cash. As for March 5th, it should be payment to Hong Kong Water. The description for the last transaction should be performed service. There are some errors in this journal entry. In the first transaction, revenue and bank should be switched. Debit bank 300 and credit revenue 300, since it is a performed service. The date is missing in the second transaction. This is a chart of accounts, listing the names of the accounts that a company has identified and make available for recording transactions in its general ledger. The numbering system are in 3 digits. These numbers are used for identifications and reference. There are gaps between accounts numbers in the new accounts need to be inserted. The accounts you will find are assets, liabilities, and owner's equity. Using the following information, I will be creating a balance sheet for Mr. Lee's accounting with an expanded equity series. Here is the balance sheet for Mr. Lee's accounting. Always remember to put the title on the top, Mr. Lee's accounting, balance sheet, and the date. For this balance sheet, the assets section is placed on top of the liabilities and the owner's equity instead of beside them. The net income is greater than the drawings by 200. So Mr. Lee's claim on assets increased to 10,900. In order to find the balance for March 30, add up 8,900 and 2,000 to get the balance. And then add it up with the total liabilities to get the total liabilities and owner's equity. Note that it has to balance with the total assets because this is a balance sheet. This is the end of this podcast. I hope you enjoyed it. Thank you.